So you're building a life together. And that usually means building a financial life together too. But what happens when that step, the one you take out of love, ends up putting your entire financial future on the line? It's a huge risk, especially if you're not married. Today, we're going to unpack how you can protect your money and your relationship, because you really shouldn't have to choose. And this quote, man, it just hits the nail on the head, doesn't it? Love is all about that boundless trust. But your credit score? It plays by a totally different set of rules. Cold, hard, and totally unforgiving. This is the tightrope that unmarried couples are walking. And it's exactly why we need to have this conversation. Okay, so here's the deal. Marriage comes with this sort of built-in legal safety net for your money. But if you're just living together, that safety net, well, it doesn't exist. There are pretty much zero automatic financial protections if you break up. That means you're basically betting your entire financial health on your partner. And let's be real, hope is not a financial strategy. Which brings us right into our first section, love, credit, and the law. Let's get into exactly why this is so critical for couples who haven't tied the knot yet. Just think about it for a minute. You co-sign a car loan. Maybe you open up a joint bank account. You put both of your names on the apartment lease. These all feel like these beautiful, totally natural steps in a relationship. But financially, every single one of them links your credit score directly to your partner's habits, but without any of the legal shields that marriage provides. One slip up on their end can literally haunt your credit report for the next 7 years. All right, so let's get practical. We're about to walk through the 5 biggest, most common financial traps that we see unmarried couples fall into over and over again. Because, knowing where the pitfalls are is the absolute first step to not falling into them. Okay, trap number 1, the co-signing commitment. This one is a biggie. It feels so simple, right? You're just helping your partner get a loan for a car or something. But in the eyes of a bank, you're not just helping, you're making a massive commitment, one that can follow you around for a very, very long time. Now, I want you to look really closely at this first point, because this is where most people get it completely wrong. You might think, oh, I'm only responsible for my half. Nope, not even close. As a cosigner, the lender sees you as 100% responsible for 100% of that loan. If your partner misses a single payment, they're coming after you for the full amount. And that debt, it really doesn't care if you break up. It's still yours. Let's move on to trap number 2, which kind of builds on that same idea of shared risk, the joint credit card. Super convenient for groceries and bills, right? Of course. But it also creates a direct pipeline from your partner's spending habits straight to your credit score. And this really shows you that shared risk perfectly. Your partner runs up a huge balance. Well, your shared credit utilization goes through the roof and both of your scores take a nosedive. But here's the real kicker, the real catch-22. Let's say you split up and decide to close the card. Well, just doing that can also hurt your score by lowering the average age of all your credit accounts. You're just stuck. Okay, on to trap number 3, shared rent and mortgages. This is where it all gets incredibly real. Whether you're renting an apartment or buying a house, the second your name goes on that lease or deed, you have taken on a massive financial weight. Let's be super clear here. Your landlord does not care about your little verbal agreement of who pays what. If your name is on that lease, you are on the hook for the entire rent every single month. And if you buy a house together, oh, it's even messier. A breakup without a formal agreement can turn into a long, expensive legal nightmare over who gets what. Now, this next trap isn't about a specific loan or a credit card. It's more about a mindset. It's the danger of just having unclear spending rules, of just kind of winging it when it comes to your shared money. You know that, oh, we'll just figure it out as we go attitude? Yeah, that is a recipe for disaster. It pretty much guarantees arguments over money, tons of stress when a big bill shows up, and this slow, painful buildup of resentment. But just a few simple rules, like deciding who pays utilities or agreeing to talk about any purchase over, say, $50, can save you so much financial and emotional pain. And that brings us to our final and, maybe the most dangerous trap of them all. This myth that getting married is somehow going to magically fix everything. Let's be absolutely crystal clear on this. Saying I do does not erase debt. Your wedding vows have zero impact on your credit report. Bad credit will follow you right down that aisle. And since we know that money problems are a top reason for divorce, starting a marriage with all that financial baggage, it's like deciding to run a marathon on a sprained ankle. you're just setting yourself up to fail. Okay, I know. That was a lot of doom and gloom. We've laid out all the traps. So the big question now is, how do you actually share a life and share finances without taking on all this crazy risk? Well, the good news is, it is absolutely possible. And that brings us to the solutions. So our next section is called Share Finances, Not Blame. This is all about being smart, being proactive, and using strategies that protect both you and your partner. So take a look at this comparison, because this is a fantastic, super low-risk alternative to a joint credit card. Instead of a joint card, make your partner an authorized user. The huge difference? The main cardholder is the only one legally on the hook for the debt. But your partner can still use the card and maybe even build their own credit. And best of all, if things go south, you can remove them from the account with a single phone call. It's all the convenience with just a fraction of the risk. Here's another powerful tool every single unmarried couple living together should know about: the cohabitation agreement. Put simply, it's basically a prenup for people who aren't married. It's a legal document that just spells everything out. Who's responsible for which bills? What happens to the house if you break up? How you'll split up shared stuff? And listen, this isn't about being cynical or unromantic. It's about being clear. It's just smart planning. But what if you're watching this and you're already in one of these situations? What if you're thinking, oh no, that's me. The mess has already been made. Don't panic, okay? There is a way out. Let's walk through how you can untangle a financial mess. All right, here is your 3-step action plan. Step 1, refinance. Get on the phone with your lender and talk about getting those joint loans into just one person's name. It might take a cosigner release or a full refinance. Step 2, stop the bleeding. Close or freeze those shared accounts. Cut up the cards. Do whatever you have to do to stop any more debt from piling up. And step 3, rebuild. Get back to the basics. Pay every single bill on time and work on getting those credit card balances down. So as we wrap up here, it's pretty clear that all of this advice, whether you're just starting out or you're cleaning up a mess, it's all really about one thing: building a strong foundation. And here it is. This is the most important takeaway from this whole thing. Sharing your life with someone does not mean you have to share every single financial risk. Having these conversations and putting protections in place, that's not a sign of mistrust. It's actually the opposite. It's a sign of respect and financial maturity, and that is what makes a partnership stronger for the long haul. So, I'll leave you with one final question. And I want you to take an honest look at your own relationship when you think about it. Is your financial partnership built on a solid foundation of clear communication, or is it built on just hope? Because the answer to that question is absolutely going to shape your future.